I get it. Lately, the markets have been extremely hard to navigate. So I use additional tools to help me navigate, and those are the same tools I'm going to share with you. Let me give you the most important money-making tip. It's moomoo, the platform. Now, I'll tell you why it's so much better than the other platforms. First, if you use my code below to sign up, whether you open an account with money or not, as soon as you open the account, you get one free stock. If you deposit $100, you get up to 4 free stocks. If you deposit up to $2,000, you get 15 free stocks. I got Coin, my friend got Apple, another person got DraftKings, and one more got Fuel Cell. So let me tell you what else is great. It's the community. Their community is second to none. First off, I'm extremely happy because they don't block my posts. I'm always providing data and better trading information to help you. Let's understand, it's us, the retail trader, versus the institutions. They offer a ton of free learning tools, free charting, free analytics if you don't have time to do your own homework. And it's a one-stop shop for trading stocks, ETFs, ADRs, my favorite, options, or even if you're trading penny stocks, which are OTCs. Now, lastly, remember the most important thing, which I mentioned in most of my videos, trade with a strategy. Do not trade with emotion. Now, you've heard me mention it before. Institutions, hedge funds, banks, they do things to manipulate the market. And I talk about that all the time, whether it's a short report or whether they're doing a pump and dump or looking for a certain stock to manipulate. It happens, and it happens every day. So how do we take control back? Well, we use specific commands that help us process the market. The same way big money, hedge funds, institutions, they use the same information. And that's what I'm here to share with you. So I'm going to pop open Discord and show you some of the tools that I use and how we look at them and how we process them and how they can play to your advantage. Because remember, you didn't start investing to lose money. You started investing to improve your financial future, not to put a hindrance to it. Let me pull up Discord channels really quick, and then I can show you which ones and what commands I use the most. Let's get rid of me completely. We've got Discord up. So first, there's a how-to. So for anybody that's not taking notes in this video, and if you are and you have questions, ask the questions below. But if you're not taking notes, it tells you right here. You can type in TR Big Flow and enter your symbol. It'll show you the 10 largest option flow orders for the day. TR Flow Sum, and then whatever symbol. It shows you the summary of statistics for the options flow given that specific ticker, whether it's the SPY, whether it's Meta, whether it's Apple. Again, the video the other day used these symbols. My video today is going to use my favorite symbols. So let's go down to the end. And again, we have a lot of people using these this channel. So again, you can see, but top flow. So I was about to use top flow. It was just used about an hour ago, but I'll type it in for you. So TR hyphen, I'll type in top flow, and then I will type in, let's just hit return. Now this is telling me the top flow for the entire market. So the most number of calls were purchased on Salesforce. Let me just blow this up for you. Here we go, Salesforce. Then you go down, calls on OKTA, calls on the QQQ, calls on Peloton, calls on ExxonMobil, Snow, TLT, which relates to bond yields. You have Roku and EQT, which is another energy corp. All right. Now, bearish flows. So again, the most negative sentiment right here, SPX. So they're telling you SPX, the SPY could go down, whereas QQQ has a little more support. Specifically, stocks that are bearish and have the largest outflow, the largest bearish signals as far as puts go. You're talking about Alibaba right here. Then you're talking about Meta or Facebook, which I believe went down to 150 yesterday. Zoom Technologies, Amazon, Square, Netflix, Shop, and Moderna. So you're seeing some pretty large companies that are taking the brunt of the bearish outflow. So that tells me as a whole, if I zoom out on the market and I'm saying, wow, they're pretty bearish on some massive companies. Baba is like a leading Chinese company. Meta is one of the FANG for the US. There's Amazon right there. Square is there, Netflix is there, Moderna, one of our top, healthcare companies. So again, telling me the flow on these stocks is bearish. I have more symbols that I'm going to go over. So let me just pull myself back up real quick and tell you. The next two symbols are going to be net flow and algo flow. Let's bring up Discord again and let's go with the next command. So the next command is net flow. So let's check out the net flow. And again, I like to look at the SPY because the SPY tells me market direction. So I type in TR-net flow SPY. So then we can look at the stock. The stock, which is the ETF, is in white. So we can see the action that happened yesterday. Now, along these option lines, what was happening? People buying calls were getting less and less into it, meaning the call volume was going down. At the same time, you could see the premiums for the puts were going higher. So again, another bearish trend. So I mentioned the first chart that I looked at this morning. Now the second chart I'm looking at is also telling me bearish trends. And I'm thinking, oh, let me point out which are the levels of the SPY. So let's use another chart, okay? Let's go in here and we'll use TR DP levels. So DP means dark pool. It means stocks and options, and ETFs that you don't see traded on the open market. Now you have to understand, 50% of the trades that happen throughout the day are done on the dark pool. Meaning if you don't have a platform or a service that you're using, you've got no clue. So let me bring it up and I'll show you how we use the dark pool levels. Okay, so again, I'm looking at the SPY. I'm going to make it nice and big. Okay, now you all hear me talk about different levels of support and resistance. So you can see I like to talk about 389, 393, 397, 400, 404. So it's almost right in line. Now, how this happens or how you use this to make sense, you can see that dark pool orders for the SPY at 393.34 was close to 25.5 billion, telling you that is a teetering point on the SPY. If it breaks lower than 393, you're likely to see support at 390. If it breaks higher, you're looking to see resistance around 396.60. If it breaks higher, there's a good chance it goes to 400. But understand, each of these levels I'm pointing out, and again, these are just dark pool levels for the SPY. You can use the same for dark pool levels for Meta, Tesla, Apple, Roku, whatever your favorite stocks are. But the point is, I'm asking or suggesting to you that you use an outside source to improve your trading. If you're just watching the market and you go, oh, I'm going into DraftKings, I know it's hot lately, it's going to stay hot. No, you have to look at the flows and algos. If you're jumping into Tesla, which we knew used to move up plus or minus 5% and used to make millionaires and then also crush and bankrupt accounts, it's so much easier when you have your cheat sheet, when you're looking at dark pool orders, when you're looking at the flows and the statistics. It's telling you, hey, big money is going into Tesla and they're going out until this time. Now let's remember, let's just talk about some bull case scenarios and some bear case scenarios. If you see people buying calls, that is considered a bull case scenario, okay? If you see the same institution and hedge funds selling puts, now they're selling puts because they know they'll be worth less, meaning the market will go higher. That is also a bull case scenario. So you always have two bull case scenarios. You're buying calls or you're seeing them sell puts. Now, a bear case scenario telling you the market is likely to go lower. If they are buying puts, meaning they're buying puts on the market, they think the market is going down, or they're selling calls to bank premium. If they're selling calls to bank premium, they're assuming the market's going to go down. Those calls up here are going to be worth less money.